All right, Chad, we're back. Everybody says ICC doesn't work, so I'm gonna show you it does. Pretty much, if you want to follow along, this trade is from 2/10/2026 on Nasdaq. Go to about 7 o'clock. That's where we're starting at. So boom, you know what we do? We mark our high right here. We mark the high right here. This is the high we broke. So right here, this is our indication. This is our correction, and then this is the continuation. Right here, this is what we're aiming for. So this is what we want to see. This is the move we want to see right here. Boom. You want to see this move right here to the top, buy above here. Now you're probably asking me, but Doug, it already broke right there. Why aren't we buying already? I don't trade overnight sessions. Trading is like a job. I trade 7:30 to 11 o'clock. If I don't got to trade by 7:30 to 11 o'clock, I don't want to be in the market. So I'm not going to trade that day. I want to see my trades in the morning. I'm going to show you why. So boom, you come in at 7:15. Let's say you got in at 0640. Okay, cool. You come in at 7:20, right? You probably got your stops down here or something like that, right? Mind you, you shouldn't be trading. I don't like trading this session. Boom. New York session opens. Instantly stops out all the liquidity because we know you got your stop right there. You're instantly cooked, right? Instantly cooked. But I'm going to show y'all something. Let's get back to on track. 7:30. Boom. Opened up. We 10 ounce. Take down. Now, you remember yesterday how I showed y'all fair value gaps, right? I showed you fair value gaps. This right here, this is a bearish fair value gap. That pretty much means that if this was respected, this is how it would look. It would come here and then it would break down, creating lows. If that was the case, you wouldn't want to take a trade above this line because it would never reach that line, right? But what happens if it's not respected? If it's not respected, it's called an inverted fair value gap, and it's good confluence for the trade we want to take. Remember, we want to buy in our session 7:30. We want to buy above this line and aim for these tops right here, right? So pretty much what this means is, remember, a fair value gap in layman's terms is you tried to run through a resistance wall. You try to run through a resistance wall, and you couldn't run through it by yourself, so you had to go grab a friend, and then so tap into a fair value gap, grab that friend, and then you and that friend are able to run through that wall together. Okay, that's pretty much what a fair value gap is in layman's terms. But what happens if the fair value gap doesn't hold up? If the fair value gap doesn't hold up, that's good in your confluence. Because look where this fair value gap is, right? Because if you tap into this, you're still grabbing money. You're just not running through that. You're just not running through the wall you want to run through, right? So what wall? So what does it mean if it breaks through? Pretty much, if it breaks through here, that means that your friend said, "Hey, bro, we can't break through that wall down there. We need to go the other way." And what's the other way? Right to the TP. Right to our TP. Right to our TP. So what happens? So what does this mean? If you get a closure on the 5-minute chart above this candle, you immediately enter. Watch. Watch. Boom. Hold up. Wait. Let me go back. So right here, this would be your entry. You can enter right here. Right here, this would be your entry. Right here, this is your entry. This is where we entering at. We entering right here, and you can probably put your stops like right here. Boom, boom, 1 to 3, watch. Easy. Easy bread. That's the play. That's the play. That's it. That's all it is. You could use fair value gaps, because remember, yesterday we used the fair value gap to go to the upside. If you don't remember, go watch my video from yesterday. You could also use an invalidated fair value gap to know which way you're going. Because if we're not respecting fair value gaps, then if you see this right here, right? If we're not respecting sell side fair value gaps, that obviously means he wants to buy. Remember, if that friend wanted to sell off and run through this sell side wall, he would have came here, then came down. He wouldn't have closed above that fair value gap because he respected. We disrespected that fair value gap. That's good confluence. And do you think it's a coincidence? Do you really think it's a coincidence that that inverted fair value gap is right at that resistance line? No. It's there for a reason. It's there to show you, hey, look, trader. We don't respect, this friend doesn't want to go lower. He wants to break through and at least hit this top right here. And this is all you need. This is 224 points. That's 224 points. That's easy. And look, no drawdown. It's no drawdown with this. Let's go to the 1-minute chart so y'all can see. It's no draw. Once we broke this line, we up. It's no drawdown. You go straight to the top. It's no drawdown. It never on the 1-minute chart. It never comes back lower except right here. It's no drawdown. You barely get any drawdown. Boom, 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 and you good. You up to the top. Now, is that a lot of points? No, but it's low risk. It's a low risk trade, straight to the top, and you take at the top. It's you at least got to move your stops up here. You know, if we break right here, you could have moved your stops right here, and then like I said, if it comes back, it comes back. If it keeps going, it keeps going. But don't get greedy with your profits. Take your money and go. But that's the way you would have used ICC yesterday if you really wanted to. Boom. Remember, right here, this was the previous high we broke. So this right here is your indication, correction, boom. We aim for these tops. Easy money. So do your homework on fair value gaps and do your homework on inverted fair value gaps. And yeah, let's get to it, man.